sectors that we in Macquarie are positive are in the IT sector and financial sector. And I think the inflows are also coming in both these sectors from FIIs.
So where does one find value in this market now, Sandeep, after the run-up that we've seen? What does one buy? What does one hold? I mean, I know you don't want to talk specific stocks, but sectorally, where do your preferences lie?
Now, we can't talk on specific deals or stocks, but I can say one thing. India is the nightmare for the value seeker. The Indian market has traded expensive for long periods of time. Relative value is the only thing I would seek in India, and this relative value is essentially in the financial sector. To that extent, we like HDFC Bank, we like ICICI Bank, we like IndusInd Bank. These are names which are definitely both good in terms of underlying earnings growth and also the fact that they are cheaper than the rest of the market in a relative way.
Okay, Sandeep, I just sort of the point that you mentioned, right, about China, and it's a more structural kind of thing. But is it structural? I mean, what are you hearing from your colleagues, in the region, etc., or are people making too much of it? I mean, there's lots going on there, not anything positive at all. But are we at that point where, as you said, uninvestable? I mean, are we looking at that kind of thing?
Well, I've been talking about geopolitics for 2 years on your channel, and I don't think most people appreciated how much India is benefiting from that. I think the recent last 1 month event, what's happening around Taiwan, essentially show the determination of the Chinese government. So I think this is clearly after the war which started in Europe, essentially means that, if there is a concentration of power, decisions which are not good for the economy can happen. This is something which people are worried about. It still hangs in balance, essentially, as far as what's happening in China and how the geopolitics in that region will shape up. India will be directly impacted on anything that happens. So I think it's a bit simplistic to say that India will always be a winner. But in the economic arena, at least in the near term, we don't expect any major kind of eruption and a war situation in Asia. And if the Chinese economy continues to slow because of what's happening in that economy, clearly that's good for that's good for India, especially as commodity prices come down.
No, absolutely. I take all of that. My question was more to do with flows, Sandeep. How does that, I mean, what makes a market uninvestable? Or do you think, I mean, people are going are reading too much into this, and maybe 6 months down the line, I mean, the government, they realizes, well, they're hurting themselves too much, and they pull back a little bit. Is that possible? Your sense?
Yeah, so I think that's a very valid question. And in terms of flows, yes, we could see this kind of a reversal and a sentiment, and okay, now it's back to the economy, which is a prime focus for China, and therefore we should invest. And that's something which can happen. But I think the underlying geopolitical realities and structural objectives of the government have been signaled very clearly. So to that extent, that is a worry, which is why I think on a longer term economic basis, we see what's happening in offshoring, what's happening in trying to get supplies diversified and the supply chain more robust by not dependent on one country. These are longer term trends. So the flows, yes, they can reverse for a couple of months. But the structural widening of the supply chain and that the beneficiaries should come to other countries in the vicinity of China, and hopefully India can be one of them, that will happen. But yes, your question on flows, right now, it seems negative and it can change, but I doubt it can happen structurally now.
Sandeep, what about some of these platform companies which had a massive rally last year, and we have seen a near butchering of those through this year? Of course, there's been some reversal in line with the market. But, how would you approach some of these names which sort of made good money last year?
No, we don't have much coverage on these names. So I would be, it's difficult for me to give any personal recommendations as such, honestly. So I would just want to avoid that.
Stocks, that's also been a space where the jury is still out on whether we have seen the lows or not. Your view?
Sorry, I missed your question.
The IT stocks.
Okay. I think IT, we like HCL Tech. It's currently getting a lot of attention. There's definitely pushback on this, on how deep the recession is. Our view is actually the margins will positively surprise. And to that extent, the earnings growth and the valuations are compelling right now. For a longer term investor with a 2-year plus time frame, I would think this is a good time to buy. A lot of negativity is priced in.
Okay. What about some of these auto names? M&M has been the biggest gainer, up 50% this year. Eicher Motors is up 10% this month. Most of them sitting at 52-week highs. What's your pick of the pack here?
Autos have done very well. Beginning of the year, end of last year, we liked these names. I would be going a bit slow on these names and waiting to see if this consumer demand continues to be strong. I think there's a relative value definitely in IT right now and in financials.
Just in IT, since you said that, just wanted to extend that point forward to some of the mid-cap IT names that have had a very strong run. And many of these companies, whether it's KPIT Tech, Tata Elxsi, have an exposure to the fast-growing auto electric vehicle segment as well. Do you think this is still the space to be in, despite the rally that we've seen?
Yes, structurally, definitely. There would be ebbs and flows here, but in the next 5 to 7 years, this space will be much larger than what we see today. And the fact that Indian auto companies are also getting into the game, offering a decent product at an affordable price. I think definitely these businesses will benefit from the structural shift happening in the auto market.